so let's get some heavy lifting done now as per the title of the video. So here goes. We're going to look at the trial balance question that you got for your end of term exam. And this was exactly what you got. I'm hoping you remembered. You'll have your paper, you can go through, or even with this video, you can always redo because practice becomes automatic. All right, so trial balance. And let me use my spotlight so you can go through as I read. So the trial balance is used to check the mathematical accuracy. So your addition, your subtraction, whatever it is, the arithmetic accuracy of the entries that you would have done from the ledger. So the double entry system coming down. And the importance, of course, it verifies that your total debit entries are equal to your total credit entries. All right. And the second thing, it can be used to detect errors. So there are some errors that the trial balance will not pick up. That will be done in subsequent topics. There are some errors that it will pick up. So there are some entries that may be omitted from the books, or you may put in the numbers wrong. So for example, you may put in 142 in one account and 124 in another account, which can throw off the balances, and you can go back through to find where that error actually is. Truth be told, it is also used to summarize the accounts that would be used to create the financial statements. Because in the stage of the check arithmetic or the trial balance, we then move on to the financial statements. And of course, you will need those summaries to move on to create your TP&L, which is your trading and profit and loss account, or your income statement, and your balance sheet, otherwise called your statement of financial position. It can also be used. I have 1, 2, 3, 3, 4. It should be 1, 2, 3, 4, 5. It can be also used to periodically monitor the financial performance of the business to keep up-to-date records. That would be quite useful. It can be used for comparison analysis in different periods, different months. Right? And of course, it can also be used to help give reliable data to make informed business decisions. Remember that the accounts that are always debited, assets, your expenses, your purchases, and your return inwards, those accounts will always be found on the debit side of the trial balance. And on the credit side, you will always have your liabilities, your capital, your revenue, your sales, and return outwards. And we have discussed these in depth. What I can do again is to create another video on trial balance, and we go from the basics. But this video is actually just to go through the revision of the exam paper so you can do on your own time when you're ready. So, all right, here goes. So first and foremost, you are supposed to ensure that you write the name of the business. So it's Best Buy Vehicle Parts Store, trial balance as at the 30th of June, 2021. I always encourage that as you go through, you tick. Yes, you can always tick off whenever you have done the one account and move on to the next. Could save you some time. All right, let's go. So we're going to start with the first one. So we have accounts receivables. And another name for accounts receivables is debtors, because you're getting cash from them. They owe you money. And of course, it's an asset, and the asset should always be debited in the trial balance. The next one is, of course, your cash. And your cash is also an asset, so therefore you're going to debit the cash account, 6,300. Then move on to our sales. Our sales will be credited. So we go to the credit side, and of course, we're going to put $127,000. For some reason, I'm not seeing in this where we have the debit and the credit. So just spare me a second as I just do that here. Debit, credit. All right, good. All right, next one is advertising expenses. So advertising expenses, where does that go? All expenses will be debited. Why? Because you have to pay the money from either your cash or your bank account, which is an asset. And when those decrease, when asset decrease, you credit. Therefore, the other account must be debited. So therefore, all expenses account will be credited. So $12,000. We go to cash at bank. Cash at bank. Bank is also, we put cash at bank. Let's put bank. Bank is an asset, so it will be debited. There, if the truth be told, you can have something called a bank overdraft. And whenever a bank overdraft, that will be credited. And a bank overdraft occurs when you withdraw more money from the bank than you actually have in the bank. It is normally used for business accounts or some checking accounts, and it's actually a loan. So when you see a in the trial balance, is to see the bank in brackets or in parentheses, it means that would be a negative number and it would be a bank overdraft. But this one here is positive, so therefore it is going to be debited. So accounts payable, the opposite of accounts receivables. And we know that that is, of course, our creditors, people that we should pay money. All right. And your creditors, liabilities, they should be credited. So this is $36,000. They go on to our rent expense. Rent. So we know expenses debited. Go on now to our stationery. So we buy stationery from time to time for our business, whether it be pencils, pens, it's an expense. We're spending money to buy it. So the cash is decreasing, which means we credit cash or bank. So therefore the other account will be debited, which is expenses. So 4,200 debit. Loan from a friend. So you got a loan. A loan is a liability. You must pay it back. And loans, liabilities are always credited. So we put it over there on the credit side, $10,000. Then we have purchases. You are buying stock. Stock is coming into your business. So purchases. So remember, there are 4 accounts that we use to record the movement of stock. Purchases, sales, return inwards, return outwards. When you buy stock, when you purchase stock, you're going to debit your purchase account at all time. Your sales account will always be credited because it's an asset and it's coming out of the business. So purchases, stock is coming into the business, and of course, asset increase, you debit. But look at it this way: purchases, you always debit; sales, you will always credit because it's leaving the business. For return inwards, that means they're bringing back goods into your business. That will always be debited. And return outwards is leaving the business. The asset is leaving the business, so you would, of course, credit. As I say, I can do another video on these so we can go back through the fundamentals of the double entry rules. So we said purchases will always be debited, $63,000. We have salary and wages, $18,000. Those are also expenses. We have inventory. It's an asset. And this is normally the closing stock. All right. It's always used as the closing stock. There can be times you will see they give you a list, but you have to always look to see the date. But this inventory here is, of course, the closing stock. $29,000 for inventory. It's an asset, so we debit. Bank loan. Always read carefully. Bank loan, not just bank. It's a loan from the bank. It's a liability. So we go to the credit side, $20,000. And then building. Building is a fixed asset, right? And assets are always debited. So $80,000. So the next thing that we should have is our capital. So what we need to do now is to find out what our capital is. And how do we find that? Remember the accounting equation? The accounting equation is asset is equal to capital plus liability, right? And we can transpose that to say to find liability, which is equal to assets minus capital. And of course, the one we want now is how do we find capital? Capital is equal to assets minus liabilities. So what we need to basically do now is to look at all the information we have before us. Because over here we have all our credit entries and our debit entries, all right, so after calculating, the total I've got for the debit side was 293,500. And for the credit side thus far, it is 193,500. That's it. So how do we make both sides equal? That means that the capital figure. We have to then subtract the 193,000 from the 293,500, and then that would give us the capital figure, which is 100,500. And now what we're going to do is to add both of them, and we get the balance for the child. All right, so after